Hello, thank you for being here. I would like to go over with you some of the ETFs that I would invest in given the current stock market. So, the first one, before I go into the first one, I would like to define what an ETF is for you. For those of you that don't know, an ETF. An ETF is an exchange traded fund, and it's a type of investment fund that holds a collection of assets like stocks, bonds, or commodities and trades on stock exchange like individual stocks. ETFs offers investors diversification and can be bought and sold through the trading day, often with lower fees and greater tax efficiency compared to traditional mutual funds. Key features of ETFs. Diversification. ETFs provide exposure to a wide range of assets in a single investment, which helps spread risk. Tradability. Unlike mutual funds, which are priced once a day, ETFs can be bought and sold anytime during market hours. Cost efficiency. They generally have lower administrative costs and expense ratios than mutual funds. Variety. There are many different types of ETFs, including those that track specific sectors like technology, industry, healthcare, gold, or so. How the ETFs work. An ETF manager pools money from many investors to purchase a basket of assets. This basket could be hundreds or thousands of stock bonds or other security. An investor then buys the shares of the ETF, gaining ownership of a small stake in all of the underlying assets. The value of the ETF shares fluctuate throughout the day as the market value of the underlying asset changes and can be bought or sold on an exchange. Now, three of the ETFs that I would like to share with you. The first one is XLV. Now, you can find this by going on Yahoo Finance and typing in XLV here, like I did. Just type it back in there. And it brings up a lot of information on this sector. And you could see how it has all of this information with the year to date return, the 1 year return, 3 years return, and all of that. Now, you could see here in this ETF, you have top 10 holdings. So this is the top 10 holding of this ETF alone. And they usually have listed the first 10 companies as the ones that perform the best in all of the ETFs. So in this ETF of XLV, we can see LLY, J&J, AbbVie, and UNH, which is United Healthcare, etc. So while there are more companies within this ETF, they only listed the ones that are the top performing companies in this ETF. So like we noticed, just read that ETFs have an ETF manager who pulls money from many investors, to purchase a basket of the assets. So you won't have to worry about this ETF when it's going down, because there's already a manager that you're paying, by purchasing this ETF, that there's already a manager that you're paying when you purchase this ETF. So they are balancing this ETF, so you don't have to worry a thing about it. So if we look at how this ETF has been performed, we can take a look at um, we can take a look at this website here. We can take a look at this website here and see sector SPDRS. and we can see more details on this particular ETF here. So we have an overview, as we could see, the 1 day, the 5 day, where it's been, 1 month, etc., where it's been. We can also see the holdings that we just looked at in Yahoo Finance. We can see clearly here how it's performed, and we actually see the performance here, the month end, the quarter end. So you see the total returns 1 month, 178%, the latest quarter, 3.75, the year to date, the 1 year. So I wouldn't worry about the 1 year. The overall picture is what you're looking for, how it goes from 1 year over year, not just 1 year, but year over year. So this here ETF grows, as you could see, every year. It kept growing 6%, 6.53%, 5 year at 7.38, 10 year at 9.50. It shows you that this ETF is growing year over year. Okay, we see here, if we look back, it gives you a 10-year distributions overview of this ETF. And you could see from 2016, 1.1, 2017, 1.2. And as we keep going, you could see this ETF has been growing year over year here. We're only at October, so this ETF is not completed yet. So we can't determine where it's at yet in 2025, as we have to wait until January or so for the total amount for the whole year. Okay, so the next ETF that I would like to talk about is, everyone knows, well, not everyone, maybe not everyone. It's very popular. It's this SPY. So the SPY is a great ETF if you are worried about buying individual stocks. The SPY actually is well known for its performance throughout the years. It's always performing well. And we can look at the holdings on the SPY. It may not be in here. So I will go back to Yahoo Finance, and we can see here the holdings in the SPY is these very good companies like Nvidia, Microsoft, Apple, Amazon, Meta. These are the top companies in this ETF. And as we could see, the percentages, they range from the highest to the lowest in here. So this is a great ETF if you are worried about purchasing stock in this market, given that it has been volatile. It's been going down, it's been going up, but it's going down a lot more. So, I would say if you're worried about the stocks, the individual stocks, then you could look into purchasing an ETF. If you don't know where to put your money, purchase the ETF. The ETF will give you peace, and you won't have to worry so much about the stocks itself, because if a stock is going bad in an ETF, there's a manager, as we saw here in the explanation on Google about the ETF. They have a manager that oversees this. That is the reason why you pay that fee, when you purchase this ETF, when you have, your ETF in the brokerage, right? So that way you don't have to worry, and they take it out from, whatever you have in your brokerage. It's taken out. So you don't need to worry about, how an ETF perform, because the ETF has a manager. As we noted here, an ETF manager pulls money from the investor to buy the basket. So the manager is who, does that balancing balancing of the ETF itself. So yes, so I just wanted to mention that. So the SPY is a great ETF along with the XLV, the healthcare ETF. So I want to check and see here what is showing me. Okay, there's not a lot of information in here on SPY. Okay, so another great ETF that you can look into purchasing at this time could be utilities. So utilities usually come on the XLU. So if you want to diversify your portfolio, you can look at utilities. So we'll see who they're holding. They have Nextra Energy, Southern Company, CEG, all of these companies here, Exelon Corporation, and all of that. So again, it has the highest percentage company that's bringing the highest percentage in as a top, and all the way the highest to lowest percentage in here. So looking at how XLU has performed, we can take a look from this website and see how it has performed. So it shows the 5-day and all of that, all the holdings as we see here, the performance. The performance is great. Look at the performance. So 1 month is 4.13. The latest quarter, 7.53. Year to date, the 1 year, the 3 year, the 5 year. It keeps going up. The 10 year, it came down a little bit, but, year over year is looking great as from inception. So this is a great ETF also to hold. ETFs have a certain time that they would maybe be doing way better than other ETFs. So that is another thing, it's not to worry about, but it's just to know. So again, all of these ETFs have a manager that manages how the ETF is performing and to ensure that that ETF is performing to, make money for their clientele. So I would not worry about that. Yes, so I just wanted to bring this to you. Do you have an idea? Instead of buying stocks, you can look into purchasing ETFs for your portfolio. Remember that these ETFs hold a lot of companies within them. So it's not like you're purchasing one company. You're purchasing all of the companies that is within the holdings that's under the holdings here. All of these companies is what you buy. So let's say you bought 100 XLUs, $10,000, you bought 100. You now own all of these companies, 100 times. So this is these ETFs, they perform well year over year, as we saw here, year over year, it's performing well. Don't worry about the individual stocks because this is just how it's changed based on the current market. But overall, it's what you want to look at, the bigger picture of these stocks. You just want to look at the bigger picture of these stocks. So I just wanted to bring this today to you so you have an idea of where you could put your money when you're, looking at the current stock market and whether, where it's going, because I know it's been very slow lately in the stock market with the VIX getting so high. As we could see here, the VIX is at 25 today. Today, the 16th of October, we can see that the VIX, went all the way up there. So I would say not to worry. If you're looking for a safe place would be in the ETFs because they are managed by the managers, the ETF managers. So I would not worry too much about where the market's at because stocks go up and stocks come down. Always remember that. It always comes back up. So the VIX is going up, the market's coming down. It's a great buying opportunity for those of you that would like to put your money in the market. Now is a great time to purchase because when it goes up, then you would wish that you did purchase stocks or ETFs when it was down. And this is the time to purchase. So, okay, I just wanted to bring this to you really, I just wanted to bring this information to you so you know um, that is a great time to purchase stocks. Whether it looks like it keeps going down, just keep purchasing because the money is made when the market gives you an opportunity. And right now, the market is given an opportunity to purchase the stocks for the long term and or ETFs for the long term. Thanks for watching and please subscribe for more videos like this and share this